Hello everyone and welcome to this morning's webinar. Great to have you join us for this session. Changed the time slightly. We found a quarter to 11 was a little bit too late. So anyway, it's really good of you to take the time out to join us today. Sorry, trying to get my words out, trying to sort out other things at the same time. I think it must be, I think I'm still recovering from the shock of actually seeing sunshine today, and it's warm. Oh dear, amazing. And of course that's has been the cue for one of our neighbours, we don't know who, to have a bonfire. There's been burning something for the last 2 days. Great. Spent 6 months waiting to open my door, and now I can't, I have to keep it shut. But you know, a small problem to have to deal with. Right, back to what we are going to do today. Obviously, we're going to be looking at the Forex market. But before we start, can I just draw your attention to the disclaimer that I know you can see on your screen? As you know, trading can be a very risky business, so please don't ever think of using money that you cannot afford to lose. Now, I know we have some new people that come along to these sessions. I know we've got some of our Forex program students, you've got some of our quantum trading users, so thank you so much, as I said, for coming along to join us today. But for those of you who are coming along for the first time, what we're going to do is we'll be looking obviously at the charts and at the Forex market, and from a technical analysis perspective, we will be looking at the price action together with the volume. We have a methodology called a volume price analysis, and volume price analysis is exactly that. It's this interrelationship between the price action and volume. But VPA actually has some other elements as well, which I'll explain to you as we go along. But that is essentially that's the central concept of this methodology. But once you have the technical analysis sorted out, there are other factors that we have to consider. One of them is obviously the fundamental news. What is the data that's coming along today? This is the first week of the new month, June. That's always a huge a data dump week, if you like. That's going to impact the price action. But we also look at what's happening in other markets. We call them related markets. We do what's called cross market analysis for sentiment, for market behavior, if you like, because that too will have an impact on individual currencies and currency pairs. Everything I've just explained, you can find on Amazon in the various books that are up there, and we've even put a little set together. It's a digital box set that covers everything that I have just described. Now, VPA, as I said earlier, obviously we've got volume, we've got price now. The question we are always asked, well, you know, there's no central exchange for the spot Forex market. How can you, what volume do you use? And yes, it is the, what is provided by your individual broker, and what the broker is providing is what's called tick volume, which is activity. It's a proxy, if you like, for real volume. And even though it's not 100%, because it's obviously restricted to, as I said, what the broker is providing, what he is drawing from the interbank market. They get their feeds from the banks that make this market. It is good enough, and you'll be able to see that when we show that on the charts. We use candlesticks. We obviously look at patterns, and obviously with and the fifth element of volume price analysis is actually support and resistance, and that's absolutely key. And when those of you who've not come along before, you'll have a look at my chart setups. I've only got MT4 today. David has Trading View, he's got Ninja, he's got TradeStation. Pardon? And TradeStation as well. He uses a combination of all of those. I tend to, at the moment, I've kind of gone back to dear old MT4, and it suits me. I have also got a Trading View account. It's not a paid one. It's one of those, the free ones. And I've actually got Bitcoin up. And the reason I've got Bitcoin is because to look at it from the perspective of volume price analysis. Now, on top of that, you then have your indicators that you add to your charts. Now, indicators are fantastic as long as you know how to apply them. properly, and are they being, are you optimizing them in the sense that are you using them in the correct on the correct chart in market environment? And what VPA does, it actually tells you, what the state of the chart is. We call it the C states. If those of you who are in the program will know what I'm talking about, I'll explain that a little bit more as we go along. And finally, we have time. Time is the time frame that you are trading, but also multiple time frames. And when you see my setup, the profiles that I set up on MT4, you will find you'll see that more clearly. Talking about indicators, we've actually developed some of our own. I do use some standard ones that come with the platform, but David and I took this decision some time ago to develop what we considered, made our life a lot easier, in the Forex market, and also for VPA. These are the ones that we use for Forex. They really give us an instant view of where is the flow. Is the flow into the dollar? Is the flow out of the dollar? Is the flow into the yen? Is it the flow into the Swiss franc? Because, as I said, these currencies, not only do we want to see what the price action is, we want to there is a reason behind that price action, and one of those reasons is sentiment, and it's the quickest way to see it, rather than looking at all the 28 charts or so that we tend to trade as retail traders. So the first one is the currency strength indicator. That breaks it down to the individual currencies. And then we look at the currency pairs through the matrix, the array, and the currency heat map. That brings me nicely to what I call my dashboard. This is where I always start. And I have the Dixie. This comes courtesy of the broker that I have, which is XM. Not all brokers offer this. We actually have a Dixie indicator as part of the indicators that we've developed, because obviously we need to know, what is the dollar? Is it being bought? Is it being sold? But I actually have it on the Dixie, and as you can see here, when I said about levels, these are the levels that I use. We use levels in two different ways here. You can calculate the most important levels on your chart using a number of different methods. One of them is obviously Fibonacci. Another one you could even use moving averages. We use a price-based one based on the Camarilla protocol, which gives me these 6 levels. But we also use volume levels, and these are derived from what we call the volume point of control. As I said, when David and I put together these, develop these indicators that come part of the quantum package, they're all there for a reason, and each individual one supports a concept of volume price analysis. So the yellow line is the volume point of control. This is the area of the chart, if you like, where you could say, in terms of market profile, the market is in some kind of balance. There's no real clear direction or divergence. It's certainly not in a trend, as we can see here on the Dixie. It's trading in a range. It's moving sideways, which markets do pretty much most of the time. And what it tells us, for us as traders, first of all, it tells us that it's a sideways market. Now, this particular sideways move in the Dixie is fairly measured. There's not a lot of volatility. Yeah, you've got an up day, you've got a bit of a down day, you've got an up day, and then you've got what turned out to be a sort of a weak candle, because you've got a wick to the top of that candle. But essentially, it's all around the volume point of control. And the support for the Dixie at the moment, we can see we've got a double support. We've got a price-based support, which is the S4 on the Camarilla, and we've got this volume support. This is the last support line that is taken from the volume point of control. Now, it's actually, although it's still going sideways, it's sort of on a bearish bias, if you like, because obviously the price action is all pretty much below the volume point of control. So if the dollar and the Dixie is to move higher, you can see it's got a bit of an effort because it's got to get through all the price-based support levels, but then you've got all this volume resistance here, this density of volume, because what the volume point of control does at this point here, you can see this histogram comes right over to the left-hand side of the chart. This is the zone, the area that has been most heavily traded. It's transacted volume. When you go back up and look at the histogram, you can see there's all these bulges that you see here. Now, if price does get there, it's going to have a bit of an, it's not going to shoot through there. It's going to be a bit of a struggle, and it's going to need an awful lot of participation, activity, an awful lot of buying. Now, one of the reasons why the dollar is actually very bearish at the moment is over at the CFTC, dollar shorts. This is the futures market. They are betting very heavily on a weak dollar. So it's got a lot of pressure on it at the moment, not just in the spot market, but also in the futures market. So that's my dollar index, and that's why it's set up in this way with the support and resistance based on price and volume. Now, moving over here to the left-hand side of this particular profile, this is the hourly CSI, and this gives me my instant snapshot of what the individual currencies are doing in this time frame. The hourly chart I have found, and a lot of the students have found, is it's a perfect chart because it's close enough to the previous session. It tells you what's going on at the moment, and it gives you a pretty good clue as to potentially what is going to be coming up in the near future, because as most Forex traders trade the shorter term time frames. Some are scalpers, some maybe 5-10 minute charts, and so you need a benchmark chart. You need to see what has happened and what is going on now. These individual currencies, and the thing that really stands out at the moment and sort of complements what's happening on the Dixie is we can see there's been a pretty, some pretty decent buying of the US dollar, which is this red line. And what's also been, we've had some buying is in the British pound. The British pound had a bit of took a bit of a tumble yesterday, which I wrote about on my blog. I tend to focus on the sterling pairs. That it suits me, and it also suits the time zone that I'm in, because the other thing you have to bear in mind with currencies and currency pairs is they are subject, obviously, to flows from their local time zone. So the yen is traded 24/7, 5.5, isn't it, David? 5.5. But it is going to be of particular focus during the Asian session. That doesn't mean you can't trade a yen pair in the London session and the US session, but they still maintain their local flavor, as it were. So this tells me what the individual currencies are doing. It gives me a clue as to maybe what sentiment is like at the moment. And that is, you have to look at the safe haven currencies. You look at the dollar, you look at the Swiss franc, and you look at the yen. And there's a bit of divergence. You can see that when the dollar tends to be, when it's being bought, the yen is being bought, and the Swiss franc is being bought, markets are not really in a very happy mood. The risk is, they're a bit nervous. Risk appetite is not a high priority, as it were. But we have divergence. We've got buying of the dollar. We've got some buying of the yen, but actually the Swiss franc is selling off. Now, the Swiss franc that has happened in the past. Markets are a little bit, they don't know what they want at the moment. Everything feels a bit kind of nervy, fragile. It's been like this for a little while, and it's going to carry on for a while longer. One of the reasons is inflation. Another reason is a sort of secondary reason is maybe the virus. Is it under control? It certainly seems to be in some places and not in others. But inflation seems to be the main narrative, and that means that stocks and risk currencies are going to suffer. But what haven't suffered are the commodities, and this is where you look at currencies such as the Aussie, which is a risk currency, but will also be bought if commodities tied to Australia and to China are, China's buying a lot of commodities. They will need a lot of Aussie dollars, and so you will find the Aussie being bought, sometimes contra to the sentiment narrative. So this is all, and you can glean all this from what you see on this one simple indicator. Then I move up to the matrix, which I have here, and it tells me which, where is this flow going into what pairs. And the one that immediately, as you can see here, based on the dollar, you can see that the strongest flows, and we know they're the strongest because based on the values that are given by the side of the pairs. In fact, the Aussie was was down at the bottom when I looked at it earlier. It's now the New Zealand dollar, which is having which is carrying on lower, and at the top we've got the dollar Swiss, because we've got this nice divergence here. When the lines are following in parallel, you will find the pair is likely to be in congestion. There's no strong divergence. You may see a movement, but it's not as defined, if you like, because that's what we are looking for a good solid trade. We want divergence. We want an equal force of buying and an equal force of selling. It doesn't mean the pair won't move, but when you have them moving in the same direction, it's very labored, and the risk on the trade as well of one of them suddenly reversing is probably that much higher. Now, interestingly, for me, as I said, I like to look at the pound, given that the Aussie is as I said, is being sold. As I know, was the weakest pair in the majors. Is that actually going to help me with my cross pair? And it certainly did up to a point, but it's the Aussie, if you like, is the sell of the Aussie is much stronger in these against the US dollar. So you have this sort of relative strength and relative weakness reflected also in the cross pairs. And I also use it to see that whether the selling or buying of a particular currency is universal across all the pairs. Right, the best way to see this is to look at the actual pairs themselves. I didn't really bother with the others. My other point is cable. That's interesting because we can see this strong buying in the dollar. But the thing with the cable is you can see here. Let me just take that off, and you can see it better. Take that off, and yes, you can see the dollar rising, and you can see cable rising. And given the strength of the move in the dollar, clearly, if you are a trader who likes to trade the majors, probably cable is not one to look at the moment. It doesn't mean to say that cable won't roll over and the strong dollar will continue. And it's what's called what we call part of this rotation. So when you see strong, as I said, strong buying or strong selling in one particular currency, you then pick it out in its matrix, as we see here. Let me just pick this out again. Let's have a look at dollar. There we are. And there has been strong buying, as we can see here in the US dollar, reflected more strongly in the Aussie and the New Zealand, but it hasn't quite been picked up yet, or not to the same extent, although the euro dollar looks like that's sort of having, as you see at this point, it was moving in the same direction, but it hasn't been reflected as strongly so far in cable. And by looking at the currency pairs in this way, what it helps you is you can find a trade in one pair, for example, in the Aussie dollar or New Zealand dollar. And when that sort of looks as though it's coming to a bit of a pause point and you think there's going to be a reversal there, but you can see continuing strength in, say, the US dollar, well, maybe that could be a good opportunity to go and see, well, what's happening in, say, cable. Maybe, maybe cable is now going to pick up the baton, if you like, for dollar selling. And you can get all this from these indicators. They will highlight potential trades. They will tell you what your favored currency or currency pair is doing. on its own and in relation to its matrix of pairs. And you can then have this other level, which basically shows you, the movement of something like the dollar. What's it doing at the moment, and is that going to come to a halt, or is this actually going to turn into a really nice trade? But not at the moment. And and sometimes that doesn't happen until we have the session crossover. Right, first of all, this morning was pound Aussie, as I said, for me, pound Aussie, and this is my setup that I've got here. I just want to run through it very quickly. This is on my MT4. I have 5 charts. Those of you who come along regularly will recognize this. I have let's just take that off, because I'm talking about the monthly as well for a particular reason. I have the daily chart, I have the hourly chart, I have the 15, I have the 5, and I have a Renko chart. This is a non-time based chart. And the reason I have these time frames, first of all, they are the ones that are, with as MT4, you are restricted, which is absolutely fine. In some ways, when you're starting, it's best to have, not have, such a wide choice of timeframes, because it can really overwhelm you. With MT4, you get what you're given, and you work with the restrictions of the platform. And sometimes that's the best way to start. Now, the reason I have this particular configuration is all to do with the Camarilla level, and that is because the Camarilla levels are calculated at the end of the trading session for all time frames, but not including the hourly chart. So that's, they're refreshed every well, in the evening, whenever the new session starts. But on the hourly chart, going up to the daily, they are there for the rest of the week. So you have this, you have levels which are valid, as I said, until Friday, until the market closes. You do have occasions when the levels are taken out on the hourly chart very early on in the trading week. I mean, some on I think last Monday, all the levels on some of the pound pairs were blasted through, because we have 6 levels. By the end of the session. So what you do is they're still valid. They will come into play if the price reverses, which it did, and then you work with the daily levels, which are then, as I said, refreshed on a daily basis. I actually have the individual currencies at the bottom as well, just the 2, to give me an idea of, are they moving sideways? Are they in a strong divergence? What is the state of play with that? And I've got the daily chart for some context. Now, what's interesting about the pound Aussie is we can see here, it has been in a trend since it moved away from this range bound a phase of price action around the volume point of control. You can see here, when it actually broke away, you can see the volume, quite strongly rising, which is what we want to see. Congestion phases on the slower time frame charts kind of also have an impact on the faster time frames. If they are very tight, if the ranges are very narrow, you're going to get some really choppy price action in the faster time frames. But eventually, nothing stays in congestion forever. It will move away, and it did. And it's nice to see this really nice, strong, accompanied by strong volume, as we can see the rising volume here. We also had a change in the trend monitor, and obviously the trend dots stayed, were blue all along. Now, what's interesting is we had a strong move. The first break, a close above the volume point of control. Then we had this sort of kind of consolidate, a sort of nothing candle really, but again, a lot of volume underneath that candle. Then we had the third candle, which really pushed it up. And then on the reverse, on the pullbacks, when you're in a, you've started in a trend, what you want to see, traders always get, well, I know it's moving high, and then I get a pullback or a correction. Well, how do I know it's just a correction? How do I know it's just, a minor pullback before the primary trend continues? Well, this is what will tell you. Basically, these two candles, you have weak candle here because you've got a wick to the top of the candle. You also had a pivot fired, so there's weakness coming in, and it's got a reasonable amount of volume on it. But that's just one candle. But it's the subsequent candle which is really the clincher, because you've got a nice wide, a down candle with no wicks. But look at the volume; it's falling away. So what does that tell you? Well, that tells you that there's not concerted selling under there. And you then wait for the third one, and then once you have the kind of break of the high of this candle here, together with this the falling volume on the down candles, you're pretty much you are in an uptrend. Now, what's interesting here is you have another two little pullbacks here as well. 1, 2, 3. You've got got a 3 candle, and you've actually got quite a lot of volume underneath it. But actually, I know you can't see it; it's very difficult. These are what we call anomalous candles, because what you're also looking at is you're looking at the level of volume going under here, and the candle shape. That level of volume, you would expect that candle to be much deeper, and that one as well. So that is an anomaly. So that is also telling you, hey, yeah, we've got a lot of volume coming in, but the sellers aren't having a lot of, luck in actually pushing this lower. And in fact, on this candle, because I can see a pivot under here, that's actually got buying coming in. So that's further support. So this primary trend, these are little secondary pullbacks. By looking at the volume and the relationship between the shape of the candle and the amount of volume that you see down here, will tell you whether are you still in this trend, or are you actually looking at a definitive reversal, as it were. Now, I just want to make a point about where are we, Dave? This is have a look there. Wednesday, Tuesday. This is Monday. You look at the volume under there, you think, oh, that looks a bit strange there. Don't forget that's the holiday. It was a bank holiday here, and it was a Memorial Day in America. So when you see these very, very low volume bars on certain days, just be aware that it's because it's a holiday, right? So that's the daily, and you would use that narrative on whatever time frame. But let me just go back down to my Renko, because the reason I use the Renko chart, I use the Renko chart primarily for entries and for staying in a trade. And the way I look at the Renko is the Renko gives you a geometric look of the price action. As we can see here, we had this trend lower in the pound, but as you can see, it is punctuated with pullbacks all the time, pullbacks. So it wasn't a nice smooth trend lower. It was quite choppy, actually. Then we go into a period of consolidation, of sideways. Then what often happens is you have another sort of bump down, as it were. And it's when this bump stops at a significant level. This happens to be the S1 of the Camarilla. And as I said, this was the trend from this morning. Got through the S3, the third level. The third level is quite third and the fourth levels are really, really important, because it's where price tends to stop. And if it doesn't stop, it will test again. And it tested this again. And where am I aiming for here? Well, the aim is actually the R4 on this time frame. But what I tend to use, and this is what I suggest traders look at, is because the Renko can for exits, as it were, it will pull back, and you might think, oh my goodness, it's not going anywhere. Use the time chart. Look at the patterns that you see on the time chart. And in fact, when we look at that, this was the equivalent of that R3 on the Renko. And if I put it side by side, you can see it here. This point here, corresponds with this point here. So it actually got through. But then we see this little candle up here, and you've got, you know, these little candles coming down, and they come back down to the what is the volume point. Is also coincides with the R3 on the volume point of control. You also get a change in the trend monitor. It hasn't gone to bright red, but it's gone to dark red, and you look at that, and the price is sort of sitting at the R3. You've got a change here. There is nothing wrong with coming out. You think, do you know what? I'm coming out. If it carries on again, and it looks like it has, there's no reason why you can't go in again. The cost of trading is relatively low. I know this is a cross pair, so it's not, you may not get such a fantastic spread, as it were, but that's how you would play it. Then you move to the slower time frames, and this tells you exactly in more detail where this pair is likely to pause at, and it's likely to pause there at the S3. So, if you've missed the first move, or you've got into the first move and you've come out and you think, oh, I might go in again, now what the hourly chart tells you is where this is going to, and it's very clearly on the S3. And of course, you look at the currency strength indicator to also tell you to give you some guidance as to whether it's, it is going to be a pause, but that S3 level is now key for this move higher, and I think it pretty much coincides with the R4 on the faster time frame. So you use levels as a kind of confluence, as it were. If it gets there before the end of the session, great. If not, I'll keep an eye on it later on. I'm going to pass over to David because I've talked for enough, but the other one was the Aussie dollar as well. The Aussie dollar is a very different configuration in terms of what the daily chart looks like, and it's a perfect example of what I said. It's really been, it's quite a wide, I accept some of these candles have been quite, wide, which is great for the faster time frames, but it kind of also reflects this sort of market. If the market was absolutely flying, the Aussie dollar would be, in a very strong trend. It's not in a trend, it's moving sideways. It's kind of reflecting the indecision, the uncertainty that we have in the broader markets. I mean, markets are uncertain anyway, but it's even more uncertainty than we normally have. And again, this is where your levels come into play. You can see this choppiness, as I said earlier, because we have, sideways on the slower time frames. And this is where you use your levels. So the R3 went straight through the S3, had a bit of a pullback there, and in fact, it even coincided with a pull away from the R3 there. We've got this sideways movement. We've got a lot of, you can see the volatility candles coming in on the hourly chart. It's not an easy, the Aussie dollar is normally a very steady pair, but it hasn't been because of this volatility candle. But I suppose, you think, well, that's great. That's a great signal. Comes off the R4, it's a shooting star, went to the R3, and now we're here. And where is it going? Well, you follow the levels. You follow the volume levels, and you follow the price-based levels. We've actually gone through the S4, and you just pick them off. You go down, you say, right, okay, there was an effort to rise there. We had a little sort of hammer candle with sort of reasonable volume underneath it, but almost an immediate reversal. And you look at what's happening at the Aussie and the dollar on the CSI. I'm going to come back later because I also want to talk about looking at the monthly charts for a view of what possibly is going to come ahead. And it's really nice because it's coincided with the end of May and the beginning of June, and the monthly charts are great charts to look at for possibly what may be coming in the weeks ahead. Right, I'm going to pass over to David. If you've got any questions, just pop them into the chat box and we'll answer them. And I will come back to Bitcoin because Bitcoin's really interesting, but not the reason you probably think, but I'll come back later. Is that okay, Lovey?
Yeah. Great. You can hopefully see my screen, hopefully you can hear me, and good to see you all here. very welcome. And as I have to say, as Anna said, it's lovely and warm here, which makes a nice change. Apart from the neighbours, but there we go. They're a long way away, but you can still smell the wood smoke. Anyway, just to kick off, really just to round all this up. This is on the indices. This is on TradingView, but you've got the indices on all the other platforms as well. But I've just got them here because they are moving around. They are actually moving quite strongly and have been. Top left is the pound. This one is the yen. Bottom left is the dollar. Bottom right is the euro. So you can see what exactly is going on. You can see where those opportunities lie, certainly in terms of these currency pairs at any rate. And what we've got at the moment is certainly the dollar selling that's down this one on the bottom left. There was a bit of a pause point. Then we had an injection about 5 or 10 minutes ago, which has really given it some more momentum. Exactly the inverse of that on the euro. And we've also got the yen rising. And what you're looking at in terms of, certainly when you're looking at it from a sentiment perspective, if you're looking at, as indeed I do on the account here, I haven't got it up at the moment, but I think it's about $1220, $1,220 at the moment, something like that, $1220, $1230, I can't remember off the top of my head, but it's certainly well over 1,200 anyway. What you're looking at in terms of sentiment is you're looking at the currencies through the prism of sentiment. So you're looking at the dollar and the yen particularly, and obviously the Swiss franc. You're looking at whether those are rising or falling. They won't always rise and fall in tandem. But in general terms, if sentiment is strong or weak in one particular direction, then you will tend to find that. So when you're looking at trading opportunities, not only from a sentiment perspective, but also from just a trading perspective, you're looking for those relationships perhaps which aren't quite so obvious. You're looking at related currency pairs or currencies which generally should be moving in the same direction if the sentiment is aligned strongly or weakly in one direction or the other. So always bear it in mind. But that's what we're seeing at the moment. So, but in terms of straight sort of currency pairs, and obviously the ones that have been moving very strongly just in terms of these, you obviously got the euro against the dollar, you'd have euro against yen. The pound, and that's the reason the pound dollar is not moving so strongly, because you've got the pound rising and you've also got the dollar rising. And hence on the CSI and elsewhere, that particular pair won't be the strongest trend because you've got two currencies which are moving in the same direction. Now, the buying in the dollar may be stronger than the buying in the pound, and you may get a differential effect. You will certainly get some sort of trend, not always, but generally you'll get something or the other, but it won't be very strong. All it is basically the difference between the strength of buying in one, in this case, and the strength of buying in the other. So if you've got stronger buying in the dollar, then that is going to be reflected, and conversely, if you've got stronger buying in the pound, then that is going to be reflected. If they're both buying at the same sort of speed, the analogy I've used multiple times is of two trains. When a train leaves the station, a big international station, there are lots of trains going out at the same time, and you may well be traveling on one and there'll be another that comes alongside, which may be traveling slightly faster or maybe traveling slightly slower. And that's the difference. There is a differential speed there, but if you've got two trains which are closing on one another, clearly, it's a self-evident analogy as to which is the one you want to be on. So that's where we are in terms of the indices. Just to run through this very quickly, for those of you who were already subscribed to the TradingView full package, you will have received all the indicators now. If you haven't, go and check them out on your invited scripts area of your TradingView, and you will find them there. If you're not, just drop an email to helpdesk@quantumtrading.com. We're pretty sure we picked up everybody who was on the full package, so you should have all these indicators. This is the currency heat map, and the big difference with the currency heat map on TradingView as opposed to all the other platforms is that you can actually change the time frames here. It's very simple to do. You just go into the settings up here and you just select whatever time frames you want. And obviously you can have more than one heat map running, so you can have multiple heat maps if you wish. But the beauty of it is, just cancel that off. The beauty of it is it allows you to match the heat map to your trading style. So if you're obviously on the faster time frames, you really want something that's matched to that, you can do it on TradingView. It works, the principles of the algorithm work in exactly the same way. In other words, the hourly chart or the hourly time frame in this example will carry as much weight, or will carry the greatest weight. The 1 minute will carry the least weight, when it calculates the ranking over here on the ranking ladder. So it's exactly the same principles, it's just you're using different time frames. Now, obviously on this time frame, where the time frames are much faster, these will tend to move up and down. They're not going to move at the same speed as the currency matrix, clearly, because they are weighted, but they will move more so than if, for example, you had this on the standard settings going out to the days, the weeks, and the months, where on NinjaTrader or TradeStation, then and on MT45, you will find that they will move much less frequently and are more aligned to trading where you're trading on those sorts of time frames. So they will be for your dailies, where you're holding positions over multiple days, you're looking for currency pairs to move over 2, 3, 4 days, you're holding over weekends, that sort of type of thing. So that's the currency heat map there. On we've got the others here. This is the currency matrix, the currency array. The currency matrix has these levels now applied to the matrix. Again, this is not on the other platforms. We will get around to doing it, and I can assure you in due course. Bit flat out busy at the moment doing various things. But what this tells you, it gives you a sense of when the currency pair is reaching an overbought or oversold state, if you like, in terms of the currency matrix, which is very close to the market. This one is on, I've got this on 2 minutes at the moment. But you can see there the average is 12.3. So we're around about at the average, and the all-time high is at 15. And this is over a certain number of bars, which you can obviously change as well. Down at the bottom here, you've got 11.3 on the Swiss yen. 12.9 is the average and 15.3 is the all-time low. So it just gives you a sense of perspective, and obviously this works in all time frames. So it just gives you a sense of where the currency pairs are in terms of the ranking ladder on the currency matrix. As I say, if you've got the if you had the full package before, then you will have all those indicators added, all the ones we've added, the VPOC, the accumulation distribution indicator, the new Renko, which is 2 Renkos in 1, which is, in fact, let me just show you that very quickly. Pop that back again, apologies. If I can find it quickly. I think I had it there. That's a heat map. Where was it? That one, there we go. This is basically 2 Renkos in 1. This is what we call the time accurate Renko. And the reason we call it time accurate Renko is because if you look at the price here, this is on Aussie yen, 84.77. This is 84.77. So the interface here, if you like, is aligned directly with the price action. So when the price action, in other words, when the price action goes into consolidation, so too will the Renko. It's unique. There's nothing else on the market like it. It creates these great levels and bands that just depict the price action in a very clear and clinical way. And in addition to that, it's also optimized. So this is optimized at 2.2 pips at the moment. So this is on the optimal setting, but it's very easy to switch back to the other variant. You can do it here. So you've got 2 options here. You've got the time accurate, or you can change it back to the traditional, and you just click the OK, and now you're back on the traditional Renko. The problem with the traditional Renko is that once it gets underway, and if you're using in combination like this with a time-based chart where perhaps you've got volume as well, it's very, very difficult to match the price action from the Renko with the price action of the time-based chart, because the Renko is independent of time, and therefore it doesn't align, the price action doesn't align directly in the same way with the price action. It is at the moment because we've just started, but gradually over time that gets more and more difficult to interpret as to where we are in terms of the price-based chart when you're matching it against a Renko. Just pull that out of the way, pop that over there. This is basically what's going on in terms of, this is on the dollar Swiss on multiples. That was the injection of that dollar buying that we saw. The dollar is up here on the CSI, so it's very heavily overbought. Equally, the Swiss franc is very heavily oversold, which is why I've got it up here, because, as you know, I like to find those opportunities. In terms of, let's just pull this up. In terms of the price action that led up to all this, we've got a volatility trigger here. We've got a ton of volume coming in, which is what we expect to see. The market rushed up. A lot of traders will be dragged in, they'll jump in there looking for some quick profits, and now starting maybe to regret that decision. They're now being squeezed. Sorry, just move the chat box out of the way. There we go, let's move that back up again. There we are, all right. There we go. So they are now being squeezed. We've had the volatility trigger. We're expecting one of 2 things, either reversal or congestion to follow. We're seeing congestion at the moment. If you're going to jump into this and it's going to carry on, then you wait for it to clear that level and on up we go. The price action led up to this congestion was just very typical of when you see anomalies, they just give you a heads up as to what to expect next. We had this nicely rising volume here, but then we get, these two candles here. We get the first one, that looks okay, decent volume, decent, nice spread on the candle, no wicks top and bottom. Then you get the next one, not really a huge increase in spread. I mean, we've got a much bigger injection of volume here, and really not a lot in terms of going on. I'm not sure whether VPOT was at this level at that point. It may have been here. It was probably down here actually, and it then would have jumped up to this level. So at that point, you're looking for some weakness. You're also looking at weakness. You're now trading around the volume point of control. You've got these little, efforts to rally all the time. But then we get the injection, and that's based on the fact that on the dollar chart, when I was looking at the dollar chart, it didn't look done. It wasn't. Yes, it was running out a little bit of steam, but it didn't look as though it was completely overcooked in terms of extremes. So you always got to judge these things against other things. It's not just a question of looking at one chart. You've got to look at all the indicators and everything else to go along with it. Just have a quick look at the CSIs, multiple CSIs, see what's going on. Current strength multiples, there we go. Basically, this is what we're seeing. This is on, I've got the 1 minute here, got the 5 minute, the 10 minute, and out to the 15. The dollar, as we can see here, right up at the top, very strongly overbought. The Swiss franc at the bottom. We've also got the euro down there. We've got the Aussie down here also. And that's the reason that in terms of, cable wasn't the greatest one to pick, because the two of them, for whatever reason, are following one another around. You can see the red line, the yellow line following one another around, following one another around. There is no strong trend there. So you're looking at these trends where you've got these very steep lines, one moving in one direction, the Swiss franc, the euro, very strong. You've got strong buying in the Canadian, so you could have looked at that as an opportunity. And now what you're looking at, certainly from the slower time frames of maybe 15 minutes and outwards, I'm looking at these as potential opportunities. When am I going to buy the Aussie and sell the dollar and maybe jump into that? And just as an aside, as Anna said, in terms of the on the CFTC, in terms of positions there, whenever you get to a scenario where you have a heavy bias in one direction or another, it's a very similar principle to looking at this, for example, where you're looking at overbought and oversold situations. You're looking at it in the same perspective, because when the market gets that top heavy, when everybody is either buying something or everybody is either selling something, that is the point at which you start to look at the slower term charts. And I can pass back to Anna in a minute because she wants to look at the monthlies. Those are the points at which you start to look at things and you think, hang on a minute, is this an opportunity where the dollar, and I'm talking about longer term here, slower time frames, where the dollar is now moving into a position where over the next few weeks or months, it is an opportunity to buy. It's exactly the same principles. You have to have, I was going to say, you have to be brave, because when you're buying against a dominant trend, you have to have belief in what you're doing. You can't go in nervously thinking, oh, well, I'm not sure, and it's been such a heavy trend, like the dollar's been selling off so strongly, well, now I'm going to buy it. So you do have to go in with a positive mindset. You do have to set much wider stops, of course, and that applies whether you're trading intraday or longer term, because you've got to allow for the natural congestion phase to build and then for the reversal to start, because it's very, very unlikely that you will see a V-shaped move on a dollar, a V-shaped move in any particular currency. There could be a reason, but generally you don't see it. You're going to see congestion. You're going to see a price waterfall in the downtrend. Then you're going to see congestion, all explained in the program, and then you're going to see the reversal start to take hold. So it takes time. So you have to allow for that time element in your stop loss positioning and management. I'm going to pause there, cast back to Anna, because I know she wants to talk about the monthly. So are you okay to take it back now? Yep. Okay. No, you just wanted to touch on the monthlies. Yeah. No. Just go back onto the dollar Swiss there. No. I can do. Let me just. Yeah, I've got the dollar Swiss up. Let me just move it onto this. Just have a look at the Aussie dollar. Let's see if that's see where that's going. There we go. Just load that up. I mean, it's a classic example. This is on what time frame we're on here? 10-minute, I think. All right. Yeah, we're on 10-minute here. So pretty slow. Just starting to see some buying coming in terms of the Aussie dollar. You're just starting to see it. This is on 15 seconds, so this is pretty quick, obviously. But you're starting to see it there, and this is where all trends start. They all start in the fastest time frame. Any reversals, any changes, they'll start in the fastest. Classic example here. This is, as I say, this is on 15 seconds. I'm not suggesting you use this, but I use it a lot. But the principles are exactly the same. The trend monitor, you can see here, we've transitioned from what was heavily bearish. We went into darker red, we went into darker blue, and we've come out the other side into brighter blue. So we now have a classic traffic light change where we've changed from heavily bearish to heavily bullish. We're breaking away from the volume point of control. Volume all looks okay. Just looking at the volume profiles here, when you see, you know, little pullback here, we've got a little bit of a rise in volume there, but nothing too much to worry about. We've moved up very quickly through the volume point of control. When you get these low volume nodes here, you expect to see the market move through there rapidly. It's what the volume point of control is all about, because what the histogram tells you and gives you a heads up on is where is the price action likely to pause as a result of hitting volume. Remember, this volume profile is really created from volume, price, and time. That's what it's about. It's swinging the volume relationship up onto the y-axis. So this is volume, price, and time, and it's telling you where you've got concentrations of volume. And where you have concentrations of volume, like here, and obviously down at the volume point of control, which is the heaviest down here, you expect the market or the price action to run into at least some congestion there, purely because that area is littered with old orders, new orders, all sorts of things. In addition to that, if it's an area where the market has paused in the past, then you would expect it to pause in the future because it's an important region. That's a more semantic debate, if you like, but generally used in exactly the same way as you would with price-based support and resistance. So when you've got heavy areas of volume, expect the market to congest. Where you've got light areas, then expect it to move through pretty rapidly. So that's what's going on 15 seconds. And what's interesting is we haven't yet seen, this is a trend which is based on one move, if you like. It's based purely on the Aussie buying. There's nothing at the moment to suggest any strong dollar selling. So this momentum is purely being driven by one side of the equation. So bear it in mind, it's not strong, but it's good enough to deliver. And what you want is obviously the dollar to start selling off. If the dollar starts selling off, then you will start picking up momentum. But as I said earlier on, you can get, you know, trends where the two currencies, and they are moving more or less in the same direction, then you will get a trend, but it won't be as strong as if you've got them moving in opposing directions. Up onto the 1 minute. Trend monitor here is transitioned there in exactly the same way, an injection of volume there. That's nice and price and agreement up to the volume point of control. Then we've got this is price-based resistance, which was taken out and now looks as though it's coming back into play again. We've got another level here, and we've got a more sustained region above here as well. Bear in mind that we've hit this level. You know, are we going to reverse? Where are we going back to? Probably down to the volume point of control again to retest that. Then we go up onto the 3 minute. We're just starting to see that reversal take effect on terms of the trend monitor at any rate. And down onto the 5 minute, no sign of that yet. You wouldn't expect to see it. And obviously down on the 10 minute and out to daily, you know, no change whatsoever. You wouldn't expect to see it that far out either. So, you know, there is a trend there. There's an opportunity there, but be aware that the dollar is not contributing to that particular trend. So it hasn't got the strength that you would want to see in terms of a counter currency pair. If you will look at the Aussie Cad, for example, the CAD is starting to roll over and starting to input some selling. So if you were looking at Aussie CAD, that may well be, you know, a stronger opportunity if you were looking to buy the Aussie in particular. Do you want me to pass back to you, or? Yep, just going to pass back to Anna, and you can pass back to me. Yeah.
Thank you. Right, I mentioned earlier a couple of things. Bitcoin was one, and also looking at the monthly charts. Obviously, really the best time to look at the monthly charts is at the beginning of the month, because it's great to see what happened, you know, what has happened, and also just to get a view of where, you know, if, as this is the pound, this is cable. We can see here, it has been, well, since the break from the volume point of control here, it's, you know, you would call that a trend. That obviously there have been pullbacks. There's a very sharp pullback on this month here, but it's more really to give you an idea of, well, first of all, two things. Last month was a very strong month for the British pound generally, and you know, cable did fantastically well, and if you're a cable trader, fantastic, you'd have got lots and lots of points in this candle here. When markets have, you know, a nice big move up, the probability is you're probably going to get a little bit of a pullback. You know, it has happened now. If we look at these two candles, that was strongly higher. It did have a little pullback. It's got a little, you know, thing here, but it carried on. And what you then want to look at is, well, okay, this is, you know, pound is looking good, you know, and especially if with the dollar, if that's going to carry on lower. What you then look at is the levels that are on the monthly chart. You know, is this price action, is last month's price action, has it actually taken this pair to a very key level where, you know, the pair has reversed in the past? And, you know, immediately you go back here and you look at this price-based level and you think, do you know what, that's going to be a point of some, you know, fairly serious resistance, because the thing about the slower time frames is whatever you see on there in terms of levels, they carry more weight. You know, it's just because that's just the way it is. So although, you know, cable is very bullish at the moment, it just gives you a sort of a broader picture of maybe what you can expect, you know, in the next few weeks. And the best time to do it is at the beginning of the month. And you should do this on the weekly chart at the weekend before the start of the trading week, on the pairs that you are, you know, that you like to trade. Just see, are you approaching, you know, key levels? And also, when you have a little bit more experience and you've been trading a little bit longer, look ahead. You know, what's coming up in you know, in the next week or in the next few weeks that is maybe going to have an impact on the currencies. And when you expand out, you can see quite clearly that's been around the volume point of control. This is actually quite, you know, it's a range. I know we had that. That was when was that? That was last year, wasn't it? That was March last year. But you can see here we're actually at quite a key level. So that's been a nice run up. Is that going to carry on high? It may well do, but it's just something to bear in mind with regard to cable. And you do exactly the same exercise. I've just picked off some. Let's have a look at the pound Aussie. I think the pound Aussie is, let's have a look at the pound Aussie, and then we'll look at the Aussie yen as well. Now, the pound Aussie on the month is actually quite interesting because, as we can see here, it's still really at the volume point of control. The interesting thing about last month is, compared with the volume that we saw on cable, is that really the ton of volume that went underneath that candle, which is absolutely monster. And you think, oh my goodness, but in a way it's good, but you would have expected the candle to be much taller, much, you know, a wider, a deeper range. So maybe, you know, because it's, you know, we've had this break from the VPOC. And yes, you know, we had, as I said, a tall candle. Then at the beginning of the month, there's always, you know, this, you know, reaction. It is a reaction to the price action. It always happens. Is that, you know, are we going to get a follow through? But that amount of volume with that size of candle is, you know, it's just something to be aware of. You know, what are we approaching? Well, we'd be approaching certainly this volume resistance here. But as David said, if you look at the histogram from the volume point of control, any movement, it may be a little bit labored. it's just very dense. You know, it's volume and price over time. And in fact, I think it's this one. Look at the daily on this one. No, I'm just going to go back to cable for a second, because there was something else on there looking at the slower time frames that I wanted to highlight. I think it was cable. Hold on. No, it wasn't cable. No, maybe it was a pound. It was where we had a volatility candle. No, I'm going to have to find that one. Essentially, we haven't talked about volatility. We've just mentioned it. And it was how volatility candles operate and what happens when you have when it's triggered because the price action is outside of the average true range, and the reaction that you get from that, which actually is quite a nice intro to Bitcoin. Where's Bitcoin? Where's Bitcoin? Where's Bitcoin? So I think it's here. Yeah, here we are. Right. I've actually got it on Trading View. And the interesting thing about Bitcoin is this, and I'm not going to comment on whether it's a currency, is it an asset, is it how you should be treated, and you know there's enough written on the internet about Bitcoin. And I think sometimes when you want to say anything, I think you need to don a full suit of armor because whatever you say, you're bound to upset somebody. But I'm looking at it from a perspective of, forget that this just happens to be Bitcoin, but let's have a look at this chart from the perspective of VPA, and in particular a Wyckoff perspective of distribution. Because if we look back to this period of price action across here, you've actually got a sort of, you could say it is a distribution. It obviously got to the high. The volume point of control was actually up there at, it's still up there at the moment. And then you have this break lower. You have clearly it's a very volatile asset. Down it goes. You know, you had a lot of volume under that. You have a doji candle and so on and so on and so on. But it rolled over from, let's call it a distribution. Now it's this candle, this is volatility candle here, which is neatly sandwiched between this volume resistance line and this support line right here. But it triggered the volatility indicator. I mean, you know, there's volatility all over the, Bitcoin, but this is the most important one because it hit the support, and you have this huge wick to the bottom of the candle. That's clearly, you know, buying support came in. I think the low was something like 29,000, about 30,000 was the low of this candle. And since then, it's essentially been moving sideways. And it's with volatility, when it is triggered in this way, there's really one of two reactions. One is you will get a reversal, and it did reverse, and it attempted to reverse because we have the buying under here to validate that. The second reaction is you then move into a period of sideways congestion, which is what this is doing at the moment. The question now is, well, where is it going next? And the answer to that is the levels, when the volatility candle is created, it also creates levels to the top and to the bottom. Now, this is a huge range. It goes from 40, you know, it goes from 43 down to 30. Fine, it doesn't really matter. The principle is the same, whatever it is. And it's been trading in this range and building up, as you can see here, the volume on the VPOC histogram. What would be interesting is this at some point will move. When this histogram exceeds, goes beyond the histogram that it's up here, then the VPOC will move down. Where that price is sitting within the spread of this candle will also add its own, will give you a clue, if you like, is whether this is going to go, it's going to go back to retest the 29, and we could end up sort of like a sort of double bottom there and then maybe go up again. And if it doesn't, if it takes that out, then we revisit it and look at the levels on the other charts. And if it does, then you've got the S4 down here as well. This is on the daily chart. So you can trade, there's nothing wrong with trading this on the faster time frames, but the thing to bear in mind, it's obviously, there is more volatility on the faster time frames. What is interesting also is the range of the candles within this volatility candles is actually kind of, they're getting smaller, which is interesting, given the given the amount of participation in this particular instrument. But my point is, the volatility candle gives you a very, very clear levels that Bitcoin has to take out before we have a clear sense of direction. So I'm not saying this is going to rush up. I'm not saying that's it. Throw the towel in. It's going back down to 3,000 or what have you. All I'm saying is with the trigger of this volatility candle, this very important candle at this low, with the support level at 30, this is going to be it's almost a kind of defining moment for it, in the sense that Bitcoin has been at important levels before, but I think this is a crunch level, and if it can hold and it can plow its way back up, and it's getting more and more difficult, because the longer it spends in this congestion phase, the tougher it is, and the more volume you're going to have to come in. And volume on crypto actually works really well. There is a book on Amazon about cryptocurrencies that we wrote about 3 or 4 years ago, and basically what we said was Bitcoin was the pioneer, if you like. And like a lot of things in life, or in when new things come along, the company or the person that is the pioneer isn't necessarily the one that that carries on and gets all the glory. There may be a coin out there which Bitcoin has kind of laid the groundwork for the concept, as it were, but maybe another currency, another crypto will come along. And I really, in some ways, I don't like to use the word currency with it, because it's not yet a currency. We may be able to use it as a, to exchange, but it's and also the way it's behaving. A lot of stuff I've read from very respected people, it's, to me at the moment, it looks much more like an asset, and kind of you could almost say, well, is it behaving a bit like the markets at the moment? Well, the markets are very indecisive. They don't know which way to go. This congestion phase is so important. If that carries on and it wants to go high, now once it gets beyond here, if it gets to this level, you can see here you've got this narrowing. Then if it gets through here before it even gets to the top, that's going to be a fairly fast move, at least to the top, and then it will be fast again, and then it will run into, then it will kind of slow down. So what this histogram tells you, it tells you what the pace of the move is likely to be. But what you also have to look at is, what is the volume going into the up candles and down candles? It's, I would say, yeah, people are selling. Maybe maybe they're taking their profit. Who knows? The longer it stays in congestion, the longer there's in this indecision. Certainly people who who've holding on maybe think, well, maybe I'll take a bit of my profit and what have you. You don't know. A lot of it is it's market psychology. It's trader investor psychology. You've got to kind of tap into it. And what volume price analysis does, by looking at the charts in this way, it kind of gives you an insight into that psychology. You kind of say, yeah, okay, you can see what they're actually doing. Now I use this is Coinbase for the volume. I haven't looked at any of the other exchanges. Coinbase is listed, isn't it, David, on the stock exchange? So there is, if you are going to go into these markets, then at least a trade and open accounts with brokers that are reputable, and certainly Coinbase is now registered. But I just wanted to show what it was looking like. Now you could, within that, you could also draw a kind of triangle. It's coming to a point, isn't it, David? Can you see you know, you draw your lines there. We haven't looked at patterns in great detail. It's, you know, you've got this sort of flag, sort of pennant pattern within this candle. The candle is like the flagpole, if you like. Which way is it going to go? You know, it's what happens down here. It's what happens, really what happens down here. You've got to see, you know, you've got to see a load of buying. If the pattern breaks, that is the key level. That is the level that's got to be, that's got the level that's got to hold. But that analysis, that narrative, you have exactly the same narrative, whatever you look at. Now I'm going to pass back to David. I'm going to have a look at this chart that I found, because I thought it was really interesting. I thought it was the pound cable, but maybe I should think I've written it down. To pass over to David, and I will come back to you. Okay, hon.
Yeah, I'll just Hi, everyone.
Fine.
Hopefully
Thank you.
Oh,
sorry, Alan. It's pound yen. Thank you. He's just told me. Fine. Hold on a sec. Could you thank him? Okay. Right. Okay. Let's just pass back for 1 second. Is that all right?
Yeah.
Yeah. Thank you. Okay. Can you hear me? Yeah. Thank you, Alan. Yes, you exactly right. Exactly the same thing. Pound yen. It's been in a fantastic trend if you look at the longer term time frames, and suddenly we had this. It was in congestion. We had this burst up, had the trigger of the volatility, and it's a perfect example of what I was trying to say. Back into the spread of the candle, and now, you know, we had a down, quite a lot of volume underneath it today. It's been, you know, a nice update as well. But this is what I was trying to say about volatility, and it's a perfect expression on the pound yen. So thanks very much for that, Alan.
Thanks, Alan. That's okay, no problem at all. Gordon, just very quickly on your question, when a chart reaches a daily high or low on Forex, what's the best way to proceed? It's like anything, you have to look at all the aspects of it. If you're looking at sentiment, what is going on across the markets in terms of sentiment in those sorts of time frames, you look at the indicators, you know, they're heavily overbought, they're heavily oversold. You're looking at the volume relationships, you're looking at support levels, you're looking at levels on from a price-based perspective, from a volume-based perspective, you're looking at things like the Camarilla levels. It's all to do with, you know, you've got to make a judgment call, and you put it all together, and at that point you make your decision. You know, there's no simple way of, there's no simple answer to it, but it's the same process you would go through whether you're trading intraday or whether you're trading longer term. You look at all the aspects and put it all together, and you then decide whether it's going to be a trade that you want to take or you don't want to take. And in addition to that, when you look at the chart, I'll say the only thing the only other aspect that comes in when you're trading those longer term timeframes is very much the volumes on the CFTC, where you'd be factoring those in as well into your decision making process. You'd be looking, and again, if you're looking at longer term, you'd be looking at things like bond yields, what is going on in terms of yields and everything else. So it's all putting it all together, and you make a decision based on that. And as always, you have to set much deeper stop losses if you're trading on a reversal scenario. If you're trading into a trend, much tighter, and that applies universally. If you're trading a reversal, then it's got to be wider, and that rule applies equally, irrespective of whatever time frame it is you're trading. Very quickly wrap up, because we've gone way over time. This is where you find all the indicators: quantumtrading.com, MT45, NinjaTrader 78, TradingView, and TradeStation. We will be working on a new platform at some point, which probably will be multi-charts next, purely because the code is derived from the same as for TradeStation, so it's easy language. So we will probably be doing that one next. So that's multi-charts probably in the pipeline, and thereafter we'll be looking at one or two others as well. Think or Swim possibly, and maybe one or two others also. In terms of the indicators, you can buy one or you can buy a bundle. We've got special bundle deals. You can buy the full package. If you invest in the full package, as always, you get all future indicators we develop free of charge. You get those for free. It's just the way we've always worked, and it's the way we will always work as well. If you've invested in one or two indicators and you decide to upgrade to a full package, you always get a full credit. And that also applies if you want to hop over onto the education program. So if you've got one or two indicators and you want to join the program, we will give you a credit for whatever it is you spent with us, and you'll have that credited against the purchase price of the Forex program. It is called the Complete Forex Trading Program because it's just that. It's comprehensive, doesn't really do it justice. It's a huge program. One or two people are a little bit overwhelmed by it, but we've put in there everything that we feel you need to know to trade this market with confidence. And now we've also bolted on the funded Forex program, which means you get to trade our money. There's no risk to you. You're trading our money. The risk is all ours. And you can trade your way from 5, 10, or 15,000 all the way up to $2 million. You earn as you go. We give you a kickback on profit, so you get 35% on the initial evaluation stage, and thereafter, once you move up from that level, several things happen. We multiply the amounts you can trade. You start on 5, 10, or 15. So if you start with a 15,000 evaluation account, once you've hit a prescribed target for in terms of profit, you then move up to the next level, and these are all very achievable profit targets. You move up to the next level, and we multiply the capital by 4. So if you're on 15,000, you move to 60,000 to trade our money. And in addition to that, you get a kickback of 50% of profit, and that's paid to you monthly. And also, it allows you to trade other markets. On the evaluation stage, you can only trade the 28 currency pairs. On the levels, all the levels above, you get to trade. In addition to that, you can trade gold and indices as well. So it just broadens out the whole product offering as well. But the reason we put it in place is very simple, because once you become a student on the program, you want to leverage that knowledge and put it into practice, and you want to trade, nice juicy accounts. You keep your own trading capital safe and secure. You just trade our money at our risk. It's as simple as that. And finally, this is where you'll find annacooling.com. You find all the latest analysis down here, all the links to all the various sites, the indicators, and the education program as well. So that's it. Don't think there are any other questions. That's it. Good. Thank you very much indeed. Thanks for coming along today. Hope you've enjoyed it. Enjoy the rest of the trading session. We will be back later on, much later today, not the usual sort of mid-afternoon for us at any rate, sort of early evening. I think it's 6 o'clock UK time. So we will be back later on for the stocks and futures. So we will see you then. If not, enjoy the rest of the trading day and the trading week. Stay safe, and we will see you again soon. And bye for now.